we've got Vicki with us today from True North Buyers Advocate. And as you know, I'm Mina from Pinnacle Accounting and Advisory. Vicki, over to you. Can you please tell us a little bit about you? Why True North Buyers Advocacy? Why the name? And why Buyers Advocacy?
So in a nutshell, True North Buyers Advocacy, as you mentioned before, we work in the residential and the commercial space. The residential will really focus Victoria-wide for owner-occupiers, and then for the commercial property space, we work nationwide, finding property for both investors and business owners to operate out of. So the reason why True North exists as a name is True North is really symbolic of helping guide people towards their North Star, right? So property, much like coffee in Australia, everyone tends to love property, have ideas about property, just like coffee, right? Everyone's an expert. So True North essentially is helping people that can otherwise get overwhelmed by the noise and the information that comes their way and opinions of others, stay true to their North Star in achieving their goals in property. And that's what we help them do. So we understand what their goals are, what their intentions are, long-term, short-term, what their financial capabilities are, and we help guide them to that perfect property for them.
Amazing. Thank you for explaining. I'm curious, what has been your property journey and why you got into property advocacy?
Yeah, thank you. Well, property and business journey, actually. So I have a background. I grew up in a small business background in Geelong and a certain Greek family food.
Yes.
So I often tell the story how my family, eldest child, by the way, Greek family. So, you know, I was part of reading all the leases when I was younger because my folks didn't really speak English. So, you know, although that's a little tongue-in-cheek and cute, that also heavily influenced really kind of my understanding in commercial property and was a really big catalyst in my interest in commercial property. So coming from a family background in small business, as folks were back then, they flipped businesses. And that wasn't a strategy to wealth back then. That was the only way, quite honestly, we could take a holiday as a family. So they would buy a business or start one. You must be familiar with that, right? Buy a business, start one, operate it for about 4 to 5 years, and then sell it to take a 3 to 4 month break with your family and then start the whole process again. So with that being my background in business in food in Geelong and the Surf Coast, that really gave me an insight into commercial property because I was a big part of the acquiring of leases and sites with my folks. And then I myself got into my own businesses. I've had 3 in the publishing sector and health sectors and successfully exited 2 of those. I sold them. Had a health and beauty business in Brunswick for a fair few years as a bricks and mortar business. And whilst I was running that, we are talking about 15 years ago, whilst I was running that, I volunteered as the president of an association representing 650 businesses to council. And the main reason I did that was I wanted to advocate for business owners having a voice for any particular changes that were happening in the area that might affect their business. My background in property is after I sold my businesses, I was involved with a private family office in their property portfolio. I was CEO of their property construction and design business. And we built beautiful multi-res sustainable buildings and family homes really embedded within those sustainability principles. And that was for a number of years. So it was a massive honor being a part of that portfolio and that private family office. So True North is really a consolidation of all of that, the advocacy for people, business background and property. So when you combine all those, it only makes sense that I am True North Buyers Advocate, and I've been running that for about 18 months now.
So I guess it would be safe to say that you are not a stranger to the property game, to business. You have a very, very strong experience in both, and you also have an appreciation of both, and especially what business owners go through, and how to make property a worthwhile investment.
For sure, and with skin in the game, I've got my own very small portfolio of commercial properties and residential with that as well. And I also do, on a personal note, DIY my own property, which probably looks like it's going to go on forever. But
rolling up your sleeves.
Yeah, exactly. I
love that.
Painting and caulking, it's my jam.
I love doing DIY, but every once in a while I'm like, okay, enough DIY. I'm not going to touch DIY for a while. But it's amazing. Sometimes I like to sketch like an outdoor area and bring it to life on a page. It's not intimate detail in terms of it's artistic. It's not Leonardo da Vinci or any of that type of stuff by any stretch of the imagination. It's just good to put things on paper, to plan it, and then it gives you incredible amount of motivation to actually get started and make it into reality. It's also great for problem solving because before you start, you get to have an idea of what's not going to work, what not work. And yeah, it's always an interesting process. So well done to you for getting your hands dirty.
Yeah, thank you.
Well done. I'll send you some photos later on. Please send me some photos too. Fantastic. So can you talk me through the process of buying a commercial property and how buyer's advocacy works?
So probably I'll flip that, because the slightly easier way to answer it is first what a buyer's advocate does. So
Yes.
buyer's advocate is essentially there to completely, solely, independently, wholly represent the buyer in the property transaction. So sellers are represented by real estate agents.
Mhm.
And in Australia, predominantly that's been the service that's been most focused on, is for the vendor to be represented by the agent. So as buyer's advocates, we independently represent buyers. And it's really important that I say independently, because for anyone looking at working with a buyer's advocate, the key questions that you want to ask, or key things that you want to look for, is background experience, and also to ensure that your buyer's advocate or buyer's agent, buyer's advocate and buyer's agent is the same thing incidentally. We call them advocates in Victoria and agents in most other parts of Australia. Is that your buyer's advocate and your buyer's agent works independently of any developers, that we're not assigned to any developers and we get kickbacks from them, or any agents, or whatever the case might be. And you can pretty much ascertain that just by asking the question, hopefully. So buyer's advocate helps buyers throughout the entire process of understanding what the goals are, sourcing properties, dealing with all the real estate agents, running the due diligence on areas or on properties, negotiating, going to auction, making the private offers, acquiring, the entire process. So you are looked after independently by a buyer's agent. So that's what a buyer's advocate does. What was your other question again? I'm going off on a tangent. What a buyer's advocate does, and then
What's the process? Yes.
Yeah.
And then what the actual process, and you sort of covered that to a large extent.
Yes. And so the purchase of acquiring a commercial property is slightly different to a residential property. So regardless of whether you're an investor or a business owner, you will source a site, and we help people source sites. So the way that in which you will source a site is your major websites, Real Commercial. There's a couple of different commercial websites for property. So you source a site actively, or what we do is reach out to agents and understand what the active listings are, what the off-market listings are. For anyone that doesn't know, an off-market listing is a property that hasn't been publicly listed. In commercial property, that's a really big one, because commercial leases are so long. So you generally get leases that are, with residents, a 12-month turnaround. With commercial, you get on average 8-year leases. It's really important to speak with commercial real estate agents about the opportunities coming up to acquire a site, because as an example, you might have leasing agents that know that their tenant is looking at renewing their lease, or expiring 6 months down the track, and that could be an opportunity to acquire that site. So a big part of the work that we do is sourcing what might be coming up relevant to what our clients need. So sourcing a property both for active and off-market listings. Now, once you source a property, you do the initial due diligence on it. So which means that you have a look at what the terms of the current lease in place are, or if it's a vacant possession, you really want to have a look at, regardless, you want to have a look at what's going on in the area, call up the council, find out any particular changes that might be happening to zoning in the area that might affect the property. So do the initial due diligence, as you would with the resi as well. The difference with commercial, though, is once you have found the site, you generally make an initial offer to purchase, and that offer has special conditions with it. And you have a due diligence period. So just say that I have sourced a site for a client, we've done the initial due diligence and we like what we see, and we make an offer to acquire the site for $1 million, but it is based on generally finance, subject to finance, and it's also based on a building report. And you generally have about 28 days, maybe 14 days, about 28 days to run that due diligence. So providing that the agreement is written up properly, and you always want to run that through your lawyer, you have that period of time to get your finances in order, and also, more importantly, run the DD on the building. And you want to see, generally with commercial buildings, the big ticket items in your roofing, you might want to make sure that you're not looking at any nasty surprises in roofing costs down the track. You want to have a look at roller doors, everything regarding the building on the outside and the inside that's not going to cost you down the track. So you've got your 28 days generally to have a look at the DD. Now, if you're not happy with what you see, you have an opportunity to go back and negotiate on that price, get it down. Or you may want to opt out of the purchase entirely and get your money back. So providing the paperwork is written in the way that supports you as a buyer, you can opt out of the contract if you see that there's potentially some nasty surprises. And that's really, really important. That's what a buyer's advocate does as well. So let's just say that everything goes well, then you are now in your non-conditional period, and you work towards settlement. So you're working towards settlement, and during that time, regardless of whether you're a business owner or investor, there are things that you can put in place as you're working towards settlement to ensure this settlement process. So that's what a buyer's advocate does. It works with accountants like yourself, Mina, works with finance team, works with the lawyers to make sure that for the client there's a smooth settlement process.
Just a question on the lawyers. Do you need to use a lawyer, or can you use a conveyancer?
Oh, look, I would always recommend, particularly for commercial property, you use a lawyer. and a lawyer more specifically that specializes in commercial property, because lawyers are generalists, there's family lawyers, obviously, that you really want to be using a lawyer that specifically focuses on commercial property. Now, there's nuances in there that you absolutely need to be covered for.
Fantastic. Thanks for explaining that. Thanks for telling us that. Now, in terms of the financing, can you talk to us about that? What do people need to have in place to be able to buy a property?
Yeah, for a commercial property, I would say that the buyer's advocate or your buying process is the third step in the equation. So I'm going to take it back a couple of steps. First and foremost, when you're looking at purchasing commercial property, it's really important that you start the process with an accountant, a really good accountant like yourself, Mina, that's going to sit down with clients and look at their situation holistically and look at what the best approach is for buying the property, what you need to do in terms of setting up the right structure to acquire within. So that really is your first step. Have a conversation with your accountant, get everything in place. Second step is then, and the accountant can work with the bookkeepers or whatever the case is to get all the financials in order, because of the second step is to speak with a lender. The lender could be the bank in which you do your banking with as a business owner. It could be a mortgage broker, a finance lender, specifically in the commercial property space, a lender that's going to look at a wide range of options that suits particular client's needs. So first step is accountant. The second step is finance, and then they come to us and look at what the process for acquiring property is. And much like residential as well, there's really no point in starting the process with a buyer's advocate to acquire property, because it might take months, or you might find the ideal property within a week, right? Or within a couple of weeks, and you must have your financials in order to be in a position to acquire property. So, but residential property, we don't take on clients or we delay the engagement until there's a pre-approval in place. And with commercial property, I would say the same. Now, with commercial property financing, it is slightly different. That as opposed to getting a set figure for pre-approval like you do in residential, you work with a finance bracket. So there is a bracket of lending, because generally when you're looking at commercial property, particularly as an investor, what will influence your ability to get particular financing is the lease in place for a commercial property as well. So that lease in place for a commercial property when you're an investor may influence your lending bracket. If it's a really good lease, you might get more. If it's a not so strong lease or a vacant property, you may get less in lending.
So if it's a vacant property that's just being built, how would they show serviceability of the loan? Do they need projections? Or maybe the business, or do they get valuations, say, from real estate agents showing that comparably it would probably generate about this amount?
That's such a great point. I'm glad you brought up valuations from real estate agents. So whenever you are getting, whenever you look at an IM report, an information memorandum in regards to commercial property, generally supplied by a real estate agent, take it with a grain of salt, because that has been supplied by a real estate agent that, again, going back to my earlier point, represents the seller, not the buyer. So to answer your question, with vacant possession, generally you look at the serviceability of the client. So that comes down to the accountant and the lender to be able to determine that. So it's serviceability from the client, and then finance lenders, and generally with valuations, with bank valuations, the buyer does need to pay for the bank valuation that the bank then does for the valuation of the property, which then determines, based on vacancy rates in the area, what the potential to tenant out that particular site is, and also based on yields in the area and rental, what the return is going to be. So that always comes down to bank valuation, which is more often than not and generally paid for by the potential buyer. So that's a really important point that you need to put aside. And that comes down to the acquisitions costs for commercial property, which are different to resi. You need to forecast for a few things, and one of those is the valuation report.
And would the valuation go into the value of the actual property, say at the time that it's going to be financed, or are we also looking at the income that's going to be generated by that property? Especially more so for vacant land that's being developed and it's never had a tenant before.
Yeah, I mean, there's so many nuances in all of that. So certainly land valuations are one thing, and then really specifically for particular areas that you're looking at, and the demand going into those areas. Like as an example, you really they'll determine it based on where future growth potential is, based on infrastructure spend and population growth and the rest of it. So there are a few nuances in there when it comes to either vacant properties or land that is yet to be built. So it certainly compromises your ability to get funding for that.
Yep.
But generally the people that we deal with are business owners that are looking for sites to move into. And in a couple of instances, we have acquired vacant land for them to build, because as we know, commercial property and good commercial property is in short supply, particularly in growth areas. So generally we work with business owners that are looking for sites to operate from, or commercial property investors to purchase established sites rather than property developers.
Fantastic. I would gather where there's a new site that someone is looking to either move into and use themselves, or they are leasing out to someone, I would gather they would at least need to show the bank some kind of projections. And those projections need to have assumptions, and those assumptions need to show where they get the information from.
For sure.
And that will help validate the ability for them to service that loan. If you don't mind, I'd like to switch over to structuring. I want to ask you first, what kind of structures to date you have seen business owners who are looking to buy their own commercial property for them to tenant to themselves, really, tenant lease out to themselves. What structures have you seen them use to hold those assets?
Yeah, I mean, it's I am a less an expert in structures, to be honest with you. I can share with you that generally our clients are purchasing from trusts, and they're purchasing out of their SMSFs, which is a big opportunity for, and that's obviously with a disclaimer because this is, you're an expert in this field in terms of where it's most beneficial for people to operate or to purchase out of their SMSFs, but they're generally purchasing from their SMSFs and they're generally purchasing under a trust structure. I have not had, I'm just trying to think, I haven't had many that are operating. I would say that all of them have either been one of those two.
Yeah. One of the biggest reasons why you trade out of a trust, my apologies, one of the reasons why you would hold it in a trust, not trade out of a trust, you'd hold it in a trust is because a trust has the 50% 12-month capital gains tax concession, whereas a company doesn't. A company doesn't have that. And in addition to the small business entity concessions, that can be absolutely huge in almost minimizing to potentially wiping out any tax obligations you might have on the sale of that property. And obviously we're thinking long-term, we're thinking many, many years down the track. Potentially you might even decide to pass it on to the next generation. So you need to make sure that you've structured it quite well. The other thing we generally tend to ask is, are you looking to hold this as an investment, or are you looking to potentially down the track knock down the warehouse, knock down the commercial area and build other assets in there, other several commercial properties, right? Because then it's more, I want to develop it and I want to sell it. So if it's more, I want to develop it and I want to sell it, then you potentially look at something like a company, because then you're more in the business of developing land and selling property, right? So it's always dependent on what the client wants to do. The other thing we always advise clients to look into is whether or not they want to hold it in their self-managed superannuation fund. And that's where all of us, you, me, and a lawyer and a financial planner start looking at whether this is the best investment, best area to hold it. Because as you know, with a self-managed superannuation fund, we're aiming to develop an asset that's going to help people to retire. So for us to set up a self-managed superannuation fund entity environment, we need generally a statement of advice from the financial planner. Now the client can say to us, look, I know what I want, this is what I want. On that basis, we would send them an email saying, we've advised you to speak to a financial planner. You've said you're happy to still go ahead. So we'll do that. But again, we always ask them to speak to a financial planner so they know they've had that time with the financial planner and looked at various things. They've looked at the self-managed superannuation fund environment in working with the accountant, looked at projections as to where the asset might be valued at, what the income from that asset will be in terms of the rental, the lease agreement, and how that's going to impact their long-term retirement plans. The other thing is, if you don't have a self-managed superannuation fund and you roll from a retail superannuation fund, you already have insurance policies in that retail superannuation fund. So potentially you, in closing the retail fund, you're potentially cancelling all those insurance policies. And some of those insurance policies might not be replicatable in the new environment, whether because the policy wording is changed, they're no longer as helpful, right? There's not as many incentives. So again, this is where you need to speak to the various professionals and make sure you're being looked after from how will this asset do long-term, but also insurances in the superannuation space and so on and so forth. Obviously, the rent that's going through is taxed favorably in a self-managed superannuation fund environment. And when you come to sell it, the capital gains are actually taxed favorably too. So they're all considerations for people to have. And if they're interested in looking at that area, I recommend that they speak to their accountant or reach out to us. And again, in collaboration with the financial planner, we'll run the figures and see what's best for them.
That's such a great overview, Mina. It's become such a buzzword, I think, in the property space, particularly recently, purchasing through your SMSF, either a commercial property or investment. And certainly it makes a lot of sense if you are able to do so, and providing you get the right advice to purchase your commercial property to operate out of. But it's kind of like, it goes back to that true north and the North Star and cutting out all the white noise, like get the right advice, make sure that you're pursuing something that's absolutely right for you so that you can make the right choices, not only for today, but like you said, what will have implications down the track.
You need to work with trusted advisors, and it's important to reach out to people like yourself, Vicki, and me, because we've used many professionals and we've tried and tested, and we know they've got the client's best interest at heart. And also working with professionals that genuinely communicate. So I've got lawyers that communicate with me all the time, and we're setting something up. There's a commercial agreement that needs to be drawn up. We ask each other's opinions. We say, okay, from a commercial perspective, is this what should be happening? And he asks me, the accountant. And then for me, from a legal perspective, I say, is this covered from a legal perspective? Is their liability covered? Are their rights covered? Do they know what they need to do, right? So again, it's all these various professionals working together, making sure they reach out to someone like you, Vicki, at True North, to say, is this the right property for me? Is it going to help me out too? Is it going to satisfy my needs? Is it going to help me to really manufacture, or is it going to be the appropriate lease for me? Is it going to help my business achieve what it wants to achieve?
Yeah, agree. No, that's great.
Can you give us some tips and tricks, some Vicki secrets? Don't give it all away though. Leave some.
The secret sauce.
Leave some of the secret sauce. Yes.
Well, let's speak in a general sense when you're looking at purchasing property. So let me have a think. So in terms of really sourcing out the ideal property for you and unearthing all the opportunities, I would say, first and foremost, from a practical point of view, create a spreadsheet for yourself, right? So get a spreadsheet down and create some discipline around calling real estate agents. Now, if you're looking for resi property, obviously resi agents. If you're looking for commercial property, commercial agents. And commercial is a much more of a crossover between sales and leasing agents. So anyway, so you've got your spreadsheet down. Really be diligent and disciplined. Make it, 5 a day, 5 a week, whatever your frequency and your ability is, to call agents constantly, because agents are super busy. Agents, unlike us as advocates, we're obviously super busy, but what I'm trying to say is we hold a capped number of clients that we represent at any one time so that we can offer a really thorough service. Agents, however, although they, for the most part, do offer a really thorough service, they've got a lot of properties and books. And so that means they've got a lot going on, and their ability to be able to follow up with everyone diligently and in the best interest, obviously, but they're not able to do that. So very diligently follow up with all the agents consistently, like call them and email them and text them, whatever the case might be. In doing that, and that is done on the basis that you are very genuinely looking at purchasing a property. So when you're doing that and you're very genuinely looking at purchasing a property, that will take you seriously, and you will be front of mind for any of those off-market opportunities that do come up. They want to have a really good conversation with you. Anything that's coming up around the corner that might suit your strategy, or it could be a year later and they're still thinking about you. They do know that you're the one that kept following up, so you'll be a standout from that perspective. So I would say that's a really good one to get started with. Secondly is, what else can I say in terms of tips? And from a resi perspective, because your audience, everyone has a house, right? So you're always, you're either buying a home to move into or as an investment property. I would say a good one for auctions is to always be prepared going into an auction that you've done your homework around what its value is by doing comparable sales. And also not only what its value is, but ultimately there's 3 things there. What is the value of the property? What are others going to pay for it? And what are you prepared to pay for it? And there's 3 different valuations, right? So first one is done with a bit of research. Second one, you have absolutely no control over what someone else is prepared to pay for a property. And that goes for commercial as well, obviously. And then third, what you do have control over is what you are prepared to pay for a property. And so when you're going into a property, this is particularly the case for occupiers of either residential or commercial, have your hurt price in mind in terms of understanding if someone else were to pay that amount and you didn't, but you were prepared to, what is that hurt amount? So, understand what that amount is for yourself to go there, because in all honesty, Mina, if you pay, 20, 30, 40 grand, whatever the case might be, over whatever the valuation of that property is, in 10 years time, it won't really matter. It's a site that you're occupying, and in 10 years time, it won't matter. You don't want to overpay, obviously, but knowing what your final figure is really important before you go into an auction. A really practical piece of advice is when you do go into an auction, either a resi or commercial, this sounds straightforward, but not enough people do it and they get thrown by it. Take a pad and a pen with you, and you keep track of what the bidding amounts are, and you write them down. You physically write them down, not on a phone. You write them down on a pen and paper. And the reason why that's important, it is the agent's part of the agent's role is to create that sense of urgency and theatrics during an auction. And that's to kind of knock you around a little bit as well. And so then the agents also have people from their office coming up and whispering sweet nothings in your ear about how much you should be paying for the other. And that's their job, right? But if you're solid and you have a pen and paper and you are writing down the amounts that the increments are going up by, you're really focusing on where the auction is at and what you're prepared to pay for it. If you don't do that, I've seen it far too many times that people get knocked around by being confused as to where the amounts are at and what the auctioneer is saying, and, you know, that whole kind of emotional build-up, that they either don't bid enough or that they overbid and then they're just completely extended themselves out. So, you know, there are a few practical tips in there that you can keep in mind, but those ones that I've mentioned help keep you on solid ground to make sure that you're keeping on track with what you're able to afford.
Amazing. Thank you so very much for sharing all those tips, the secret sources.
Secrets.
That's it. I wanted to just add a little bit more in terms of the structuring, in terms of the SMSF. One thing that people should be looking at when they're getting into property is potentially owning a property in a unit trust environment. That allows other people who want to invest down the track to actually come in. It can be held in a family trust, but ideally, say something like a unit trust or a self-managed superannuation fund. Because even a self-managed superannuation fund, you might be able to buy units in a unit trust in an SMSF. Now, that's a bit complex. I hope I haven't lost us there, but it's ultimately the self-managed superannuation fund giving the unit trust funds and owning a unit in that unit trust that holds the property. So then that way you have other people who want to invest in this property who also have self-managed superannuation fund being able to come in and invest in there. You can also have various other things like a partnership of superannuation funds that buy one property.
So can I ask you something on that? Because that's really interesting. And so from I just represent the kind of layman's question here. So if I were to buy, say, a property in a family trust, that I would then like to, that's an investment property that I would, or whatever the case might be, that I would then like to open up that property to the possibility of other people buying into it as an investment. I, based on what you're saying, would not be able to do that under a family trust, but you could do it under a unit trust.
Correct. It's not possible. For you to do that, you need to be in partnership with other family trusts. But then that's technically different. You've got a partnership of a partnership of trusts, and then that goes down to the trust level. Whereas a unit trust, at any day, you can say, I want to issue more units.
Yeah, that's super interesting. And so what, in your opinion, are the cons associated to purchasing under a unit trust? What are the disadvantages again?
I honestly don't think there's disadvantages. There's not many in terms of disadvantages. At the end of the day, what you want to see is what the finance will turn out to be like. Yep. Will they allow finance in that environment, in that entity? Then you could also have a mix, as I mentioned, of unit trust, a mix of a self-managed superannuation fund. So ultimately, your accountant should, working with your buyer's advocate, working with you, Vicki, and working with the finance and the lawyer, say, okay, well, these are the entities that we have. This is, say, the trading entity. This is the entity that we want to potentially hold the asset in. How is it going to be financed, number one? How much is the rent that's going to come across from the trading entity to this entity? And the thing is, they want to make sure that they actually have a contract to put that in place, the rent between the real estate, between the trading and the entity that's holding the asset. And it needs to be...
Is that compliance related?
Correct. That needs to be at arm's length.
Yeah.
Okay. Especially if you're going to use a superannuation fund environment. All right.
And that's probably one of the biggest things, right, Mina, in regards to acquiring property out of an SMSF for people to understand the compliance requirements as a result of that.
Yep. There's definitely compliance, and ultimately the self-managed superannuation fund, the purpose of it is to provide funds for retirement. That's the sole purpose. So anything that's going to, in some way, shape or form, manipulate the correct value that's going to come to the self-managed superannuation fund might potentially be questioned, and a self-managed superannuation fund is actually audited on a yearly basis. So you need to get past the audit hurdle. So everything needs to be above board. Everything needs to be documented to avoid any nasty surprises.
And there are fees associated with auditing as well, right, that people need to be aware of.
Yep. Now, depending on the accountant you work with, that might be part of the overall package for the year. Yep. So it just depends on how it's structured. But always get the advice. Make sure you've got documentation, especially if you're going to be involved in a self-managed superannuation fund environment. Now, for us, when we come to prepare financial statements, tax returns, we go through a process called preparing working papers. So items specifically on the balance sheet, we need to have documentation that proves those figures.
Yeah.
It's the same with the profit and loss, but if you're using a system like, say, Xero or another accounting program, they've got the ability where you can download or upload the files, the invoices, to the cloud. So when you click on a transaction, you can find the invoice there. But The balance sheet, at the end of the day, we're always preparing working papers to show where that figure came from. And so there's an arrangement between two parties who's going to pay rent. That's documented, and we'll make sure that's captured.
Yeah.
And we go by the contract.
Yeah.
Okay. Maybe we'll leave this for another time. Where are some hot areas that are really growing? What do you reckon?
Talk about.
So much to talk about? Okay.
You know, there's a race to acquire commercial property right now. The golden child of commercial property has been the industrial sector warehouses. There were some incredible opportunities, and I will say, Mina, off the back of the compliance requirements for residential property investment in Victoria, which are only about to become even more complex, and the funding that needs to go towards that. We're getting a lot of inquiry from people switching from residential investment to commercial property investment. So there are some areas to talk about. I'm more than happy to do a follow-up for sure. To help
I reckon we do that. We plan for that. We'd love to get you on again and get some more of your expertise helping our network out. Thank you so very, very much for your time again.
Oh, thank you.
I highly recommend our audience reaches out to Vicki at True North. She's genuinely there to help people out. Once again, thank you very, very much for your time.
Thank you to you. Thank you to the community. It's always a pleasure, Mina. Look forward to next time.
Look forward to next time. Have a great one.